Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about General Motors Co. quarterly report. General Motors Company offers a wide range of businesses and services, including vehicle design, build and sales marketing under various brand names, Buick, Cadillac, Chevrolet, GMC, Baojun, Wuling sales to retail dealers, distributors, fleet customers, and governments, software-enabled services and subscriptions after-sale services through dealer network, such as plus maintenance, plus light repairs, plus collision repairs, plus vehicle accessories, plus extended service warranties, automotive financing, software-enabled services, and subscriptions. The General Motors (GM) stock price has increased by over 27.66% in the past year due to a combination of factors. The company's strong Q3 2025 earnings and raised full-year guidance were major contributors, with GM surpassing market expectations for adjusted earnings per share and revenue. Additionally, the reduced impact from tariffs was seen as a positive development, leading analysts to re-rate the stock. GM's commitment to shareholder returns through dividend increases and buyback programs also boosted investor confidence. The company's strong performance in 2024, including 9% revenue growth and increased market share, further supported its stock price. Analyst upgrades and increased price targets for GM stock were another key factor, reflecting growing confidence in the company's future prospects. Overall, General Motors' ability to adapt to changing market conditions, expand its electric vehicle lineup, and improve international operations have all contributed to its rising stock price. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth is primarily driven by the GM financial segment, which saw a 7.6% increase in revenue. Additionally, Automotive China joint ventures experienced significant growth, with revenues increasing to $17,270 million in the first 9 months of 2025, compared to $13,268 million in 2024. The Ultium Cells Holdings LLC also contributed to revenue growth despite a slight decline in the third quarter. On the other hand, revenue decline was driven by the automotive segment, which saw a -0.8% decrease in revenue from 2024 to 2025. This decline was attributed to unfavorable volume, mix, and cost. Furthermore, decreased net wholesale volumes in Brazil and Korea also contributed to the revenue decline. Overall, the company's revenue growth is largely driven by its financial segment and joint ventures, while revenue decline is primarily due to unfavorable market conditions and operational inefficiencies. Net income and profit margins decline due to various factors. The financial performance of a company has experienced a decline in both net income and profit margins over the past year. In Q3 2025, net income decreased by $2,715 million compared to Q3 2024, while YTD 2025 saw a decrease of $2,797 million. However, there was an improvement from a loss to profit in both 3 months ended September 30, 2025 and 9 months ended September 30, 2025. Profit margins also declined significantly, with operating income margin decreasing to 2.2% in Q3 2025, down from 7.5%, and net income margin decreasing to 2.9%, down from 6.1%. The main reasons for this decline include a decrease in depreciation and impairment charges on property, net, an increase in provision, benefit, for deferred taxes, and a decrease in change in other operating assets and liabilities. These factors have contributed to the overall decline in financial performance, indicating that the company needs to address these issues to improve its profitability. The company's financial performance indicates a consistent generation of positive operating cash flow. This is evident from multiple sources within the summary, including direct statements on pages 2, 3, 27, 55, 58, and 60. The figures provided, such as $20,072, 2025, and $6.1 billion, 2025, further support this conclusion. Overall, the company's operating cash flow is positive, demonstrating a strong financial position. Has the company's debt level or interest expenses changed significantly? The company's debt level has experienced mixed changes across different categories. While short-term debt and current portion of long-term debt decreased by $1,717 million, total automotive debt increased by $951 million, 6.3%. The available liquidity also saw an increase from $29.3 billion to $36.2 billion. However, the overall debt level is not directly mentioned. In terms of interest expenses, there has been a significant increase of $0.5 billion for the 9 months ended September 30, 2025. This stands out as an exception to the otherwise stable or slightly decreased interest expenses in other periods. The financial performance of General Motors segments and regions varied in the recent period. The GMNA segment performed exceptionally well, with significant increases in net income attributable to common stockholders. The automotive segment also showed improvement, with increased available liquidity and reduced operating cash outflows. On the other hand, GM Financial's performance was not explicitly stated, but it is mentioned that its EBT-adjusted results improved. However, this does not necessarily indicate a positive trend. Cruise and Ultium Cells LLC both had mixed results, with Cruise showing minimal improvement in operating cash flow and Ultium Cells LLC securing a significant loan to support its operations. Overall, GMNA and automotive segments were the standout performers, while GM Financial's performance was unclear, and Cruise and Ultium Cells LLC showed limited progress. Management's outlook and strategy. The company is shifting its focus towards developing advanced driver assistance systems, ADAS, on a path to fully autonomous personal vehicles, due to recent U.S. government policy changes. Management expects EV adoption rates to slow down. To adapt to this change, the company will realign manufacturing and cell capacity to meet EV demand. Management plans to invest in suppliers and consider strategic acquisitions to secure critical materials. The goal is to improve EV profitability while maintaining cost focus, with a target of returning GMNA to 8-10% EBIT-adjusted margins as quickly as possible. Financially, the company expects net income between $7.7 billion and $8.3 billion for 2025, with EBIT-adjusted margins ranging from $12 billion to $13 billion. Management also anticipates a comprehensive suite of financing products will drive earnings and incremental sales. The company has a history of paying out significant amounts to its shareholders in the form of dividends. In 2025, it paid out a total of $1.1 billion over the 9 months ended September 30th. This is consistent with previous years, where the company also made dividend payments, including $1.4 billion in 2024. Concerns about inventory buildup or supply chain disruption are evident in the financial summary. Inventory levels have increased by $754 million from December 31, 2024 to September 30, 2025, with a significant portion of it being held for over 30 days. This buildup is attributed to unfavorable costs, including increased material and freight costs due to tariffs. Furthermore, there are concerns about supply chain disruptions, particularly in the automotive industry, where electrical subcomponents such as transistors and diodes may be affected by tariffs and trade restrictions. Additionally, decreased net wholesale volumes in certain regions and instability in logistics have raised concerns about suppliers' ability to deliver parts without disruption. That concludes the financial summary for General Motors Co. Feel free to comment below, and I will be happy to answer them when possible.